up almost 20 odd points on the Nifty. The mid-cap index is flat with a bit of a positive bias.
While the market continues to be range-bound, I think a lot of the action has shifted to mid-caps.
The mid-cap index is up 23 points, so the mid-cap outperformance actually continues.
This is as quiet can be. 17,600 on the benchmark indices. The Sensex is at 59,550.
We're virtually unmoved for the entire day. Not just the Nifty, but even the mid-cap index. I think both these two indices could actually end as flat, maybe without a single point move. So let's see how that goes. We'll get the average at around 332 odd. Stocks that were losing were some of the big gainers. Well, as I said in that wrap, it was a pretty much flat day for the markets. Hello and welcome to Markets Today, the show where we highlight around 6 hours of the day's trading action in just 5 top headlines. I'm Nigel D'Souza, getting straight to the headlines for the day. Market snaps its 3-day losing streak, ends the session flat. Financials remain on a strong footing. Nifty Bank outperforms the blue chips. HCL Tech reports its fourth quarter earnings. The stock rallied in early trade but closed flattish. Tata Motors gains over 1%. This is as it says that the JLR plans to invest £15 billion over the next 5 years to accelerate its EV strategy. JLR to launch its first all-electric Range Rover in 2025. Nasdaq surges more than 10% on the back of a strong showing in the fourth quarter, as its revenue growth outpaces larger peers like TCS and Infosys in constant currency terms. ICICI Securities, though, slips 4% as revenues decline quarterly in the fourth quarter. Paytm and Concor surged close to around 2% on the back of brokerage upgrades. JP Morgan bets on auto names like Bajaj Auto and Mahindra, among others. The stocks, well, they close with some gains in trade. Yeah, well, here's what we have lined up on the show for you. In market opinion, we have Dheeraj Agarwal of Ambit Capital and Gary Scholzberg of Wells Fargo Investment Institute. In corporate voices, we have Rajiv Guneja of Mankind Pharma, as well as Mr. Lakshmi Narayan of Tata Communications. Well, let's not delay. Let's get straight to the market action of the day. Dalal's straight, well, it ended its 3-day losing streak. A range-bound session, though. Nifty and the Sensex almost ended at the flat line. Financials remain on a strong footing, though, with the Nifty Bank outperforming other large-cap stocks. Surbhi Upadhyay joins us to run us through the day's trading action. Surbhi?
Well, it was another extremely range-bound session for the market, with the Nifty remaining in a very tight 100-point band. There's absolutely no clarity on the index in terms of direction, and that's playing out not just on the Nifty, on the Sensex, even on the mid-cap index for that matter. So if you look at the indices, then you would imagine there's nothing going on in the market, but of course that's not quite the thing. The action really is shifting to mid-caps and in a very big way, and I'll come to that in just a bit. But first, let me round up some of the trends that played out in the large-cap arena. Auto stocks, for instance, that's where the buyers were congregating today. So whether you're looking at a Bajaj Auto or Tata Motors, which made some announcements with respect to their EV plans, these were stocks that saw some buying. Maruti had some gains on it as well. IT has been very mixed ever since the big numbers came in. Today, TCS saw some incremental gains, but Infosys was again under pressure. HCL Tech a little nervous ahead of its numbers. So IT is quite muddled, and pharma started seeing some profit taking. So trends are very unclear, and there's a lot of sector rotation that's going on in the large cap arena. Now let me come to mid cap, because here is where the traders have been really alive and kicking, to say the least. Look at the kind of gains coming in. And today, consumer was a big theme in the mid-cap market. Whether you're looking at innerwear stocks or shoe stocks or hotel stocks or liquor stocks. And I'm just going to take some names as examples. Lux Industries, a Shoppers Stop, Indigo Paints, Liberty Shoes. We're talking gains between 6-7% all the way up to 20% in some cases. The other theme was railways, which was very, very alive and kicking, thriving really. So stocks like RVNL, Titagarh Wagons, Tex Rail, etc., they found some takers. So mid caps are doing well. That's where the action is. The large caps in a range, with the Nifty holding at least the downside. We haven't seen a breach so far this week on that very important 17,570 level thereabouts. So let's see, one more day to go.
Okay, thanks a lot for that, Surbhi. Well, in market opinion, Gary Scholzberg of Wells Fargo Investment Institute believes that India can benefit if inflation stays within the target band. He also gave us his outlook on sectors to invest. Let's hear him out.
Well, I think the Indian markets have the benefit of inflation, the Reserve Bank moving to the sidelines, at least temporarily. And if inflation can stay within their target band, that really works in favor of India at a time when interest rates continue to move up, certainly in the developed country space. We continue to focus on the high quality, highly liquid stocks in the U.S. market. By sector, we continue to focus on the more defensive sectors, healthcare, energy to some extent because of the positive fundamentals there. We are preparing for a move into more economically oriented stocks, but we think it's really too early to make that move. For now, at least, as we enter a recession, the play in the stock market is to focus on these defensive sectors.
Well, let's get you some more market opinion. Dheeraj Agarwal of Ambit Capital is bullish on the FMCG sector. Let's hear out what he had to tell us.
The huge headwinds that we saw in a number of sectors last year in 2022 and parts of 21 in terms of margin headwinds, because the input costs were rising faster than companies' ability to pass on the price increases, is now reversing. A number of other consumer-facing sectors, including discretionary or FMCG, would see some margin boost in the next few quarters.
Moving to the second headline now. HCL Tech was buzzing ahead of its fourth quarter earnings. Remember, this has not been a good earnings cycle for major IT companies. We've had the likes of Infosys as well as TCS already reporting numbers. The IT index ended more or less flattish today. Rima joins us to tell us more. Rima, what is the street estimating from HCL Tech's numbers?
Thanks so much for that. So from HCL Tech, the expectation is that it could be a modest set of numbers, right? Infi TCS have already reported numbers. The numbers have not been very good. So can HCL Tech be very different? So the expectations are fairly temperate. Dollar revenue growth of 0.2%, constant currency revenue decline of 1 to 1.5%. And the key reason for the decline is that last quarter, their products business, the software business, which is about 30% of their revenue, had a blowout quarter, very strong revenue growth. That can't sustain. So that, revenue growth in the products business will normalize, come down, and it will put pressure on their quarter-on-quarter numbers. Margins, according to our poll, are seen lower by 120 basis points, largely due to the decline in their products business, and this will put pressure on the company's bottom line, seen down close to about 5%. The key is going to be their FY24 guidance. Remember, Infi came out with a guidance of 4 to 7%. For HCL Tech, we're looking at a guidance of between 5 to 7%. This is for the overall numbers. Watch for the services business. And again, margin commentary is going to be very critical because the supply side situation is easing. So therefore, there is scope for the companies to improve their margins in FY24 versus FY23. But does it reflect in the margin guidance? That's something that the street will be tracking very closely. Remember, the stock has already fallen 5% from the beginning of the earnings season. So the street is anyway going into the numbers a bit subdued, expecting a bit of a modest quarter this time.
All right, thanks a lot for that, Rima. Well, moving to the third headline today. Tata Motors gained over 1.5% on news that its luxury car maker, Jaguar Land Rover, unveiled a 5-year plan to electrify its fleet. The company also plans to invest £15 billion over the next 5 years to accelerate the EV transition. JLR aims to launch its first all-electric Range Rover in 2025. Sanjay Suri filed this report.
JLR has spelled out its reimagined strategy for the next several years, and it's pointing the way of all electric, all luxury, very green, very clean. The company plans to invest £15 billion over the next 5 years in electric propulsion, with plans eventually to go carbon neutral by 2039. The Range Rover is due to go all electric pretty soon. The company is taking orders from as early as autumn this year for an all-electric Range Rover to go on the streets in 2025. The engine plant at Wolverhampton is switching to electric propulsion production, and JLR clearly is headed the way of sourcing battery packs and cells through the Tata plant due to be built in Europe. Sales from Britain alone have topped £12 billion a year currently and growing steadily. The company is planning to build on that in a luxurious sort of way. The company is sticking to the high end, none of those rough and ready Land Rovers of the old kind. By way of design, the company is headed the way of simple, clean lines, keeping it light, no crowded buttons. That matters for looks, of course, but it matters for battery life. JLR is working on a 700-kilometer range for the 2025 Range Rover with a 320-kilometer charge in 15 minutes. JLR clearly plans to lead the change in this fast-changing world of driving.
Well, moving on then, homegrown domestic-focused pharma and consumer health company Mankind Pharma is hitting the markets with a pure OFS worth around 4,000 crore rupees next week. Mr. Rajiv Guneja, the VC and MD of the company, says that exports have always been a small proportion of sales for the company and will continue to be an India-centric company. Let's hear him out.
We saw amazing kind of a interest. We traveled 45 days, met every possible big foreign institute, domestic mutual funds, insurance people. So everywhere, they have really, welcomed us very, very warmly, and hope you people will also do the same thing.
In terms of your business, 97% sales come from the domestic market. Exports is just about 3 to 4%. You don't have much of a presence in, a mother market like the US. Is that going to be the growth trajectory going forward, domestic markets and a little presence in in other markets such as the US?
Right from beginning, if you look at Mankind, we have always been very focused company. Always worked on our own strengths rather than on weaknesses. For example, if you go for export and we don't have some entry barrier in our products, some patents, some difficult to make products, some complex product. So for one or 2 years, we can have some profits. That would be all tactical. The philosophy of Mankind is always long term. And that's one reason only 3% export is there. So we don't really see ourselves much in export. We'll always be in India-centric. If you look at Mankind, we are 27 years old company. We launched Delhi in 2004. We launched Mumbai side 20 years back. So we have slowly and gradually evolved. Philosophy of Mankind has always been not going and covering the market, going in a market and making a mark is our basically philosophy. So once we go in any place, whether it's a consumer side, look at our consumer division. Manforce condom, number one. Not only number one, it commands 30% market share. Look at Praga News, again number one, pregnancy cards for the ladies. Again 80% market share, unwanted 72 emergency contraceptive pills. Sure. Again 60% plus. Thought is always some kind of a leadership should be there.
Interesting one. Well, we'll wait by for that IPO that will hit the markets in the coming week. Well, time to slip into a short break. We'll be back in the jiffy with the other headlines that we're tracking for you. Don't go anywhere.
Yes, yes, yes.